welcome to my YouTube channel. In today's video, you are going to learn about the objectives of an audit, how these objectives are achieved, how the factors that hinder the auditor from achieving his objective. When you see an auditor, you see him as a fault finder or an enforcer or someone who has just come to identify errors and mistakes to report to your bosses. But this may be true or not true, but the core role of an auditor is not necessarily to find errors, but to ensure that the financial records present true and fair view of an organization. When we say true and fair, what do we mean? The true represent the income statement, that is income and expenses. The fair part represent the statement of financial position, and that we mean the capital, asset, and liability. The fair part means it is the price that those are the asset and liabilities and the capital may be valued at the arm's length market, that is the nearest market, or if it is the asset, it's the amount that an individual may be willing to pay. And the fair part comes because the value of an asset is subjective. A similar asset may have a different value in different jurisdictions. The duty of an auditor is clearly defined by the Companies Act Cap 486 and the Professional Code of Conduct established by ICPAK, that is Institute of Certified Public Accountant of Kenya. So what role does the auditor play as far as Companies Act is concerned? One is to ensure that the company has maintained the relevant financial record, that is the cash book, asset register, and the ledgers. They also ensure that the company has maintained statutory books. Statutory books meaning minutes of the meetings that the organization has had. They also ensure that they have the list of shareholders. They must also ensure that they have maintained articles and memorandum of association, list of mortgages, and list of contracts. And it is good to emphasize that the auditor may not necessarily go through this document. All he has to do is obtain management representation that they have maintained this book. Okay. Now, the professional code of conduct is defined by the ICPAK, and it explains the code of conduct that the auditor must adhere to. And they include the following. One, he must ensure that he is professional in his work, he has maintained his independence, he does not disclose any information that he has gathered during the course of his work, that is the role of confidentiality. He also must be a person of integrity. He must report to the management in form of management letter outlining some of the challenges he has faced in his work. And if there's some errors that he has identified, another role is to ensure that he communicates to the shareholder in form of a report at the annual general meeting. Another thing that the professional code of conduct defines is that he must do impromptu visits to the organization as part of the continuous work of an auditor. To achieve his objective as an auditor, he must do the following. One, he must gather sufficient, reliable, and relevant evidence to support his claim and opinion. He must also obtain management representation. Management representation is important because it offers him evidence that may not necessarily be available. The auditor must also use several techniques to gather evidence, like data analysis, do something like sampling. He must also do debt secularization. He must critically examine the financial records of the entity and confirm them with the source document. He must critically examine the internal controls of an organization. He must also ensure that he obtains confirmation from individuals who are the custodians of these financial records. In performance of his audit, the auditors may face several challenges that may hinder the quality of his audit work, and these include the collusion of the management with third parties. The auditor may face several challenges. One of the major challenges is collusion between the management and third parties. Another one is poor remuneration, which may hinder the auditor from being able to gather more resources to help him in his audit work. Time constraint, when he has so many audit work that need to be completed at the same time. Another challenge the auditor may face is when the management is too ignorant that they don't even comply with some of the advice that he may offer. Another thing is the lack of cooperation. The management may not cooperate with the auditor, especially in his surprise visits to the institution. Another challenge is that the records may be poorly kept, that it is even impossible to gather evidence. Another challenge is the poor internal controls that make it even impossible to guarantee the quality of the financial records. Another challenge the auditor may face is that the system and the internal control used may be so technical that he is not even able to comprehend and gather relevant information from the financial record, or to gather anything meaningful from the internal controls. So next time you see an auditor in your organization, please treat him with respect and see him as a friend who has come to help you in your organization to achieve your key objectives. Okay, I hope you have found this video useful, and until next time, God bless.